It's my pleasure to present to you our top investment themes in China. And as Frank pointed out, consumption is going to play a very important part continuously in China. I would like to start talking about the consumption upgrade story. It is estimated that out of the 1.4 billion population in China, middle class population accounts for 400 million, or it means 140 million households. There are many definitions for middle class, but we loosely define those who can afford a flat, a car, and leisure travel, and earns about 10,000 to maybe 35,000 US dollars a year. The increase in number of middle class population and the increase in middle class income are the key drivers to the demand for better quality goods and lifestyles. As shown in the few examples in this slide, we also notice larger companies continue to become larger, as they have the scale to innovate and being able to gain market share by launching premium products to cater to the needs of the growing demand in the middle class. This slide shows a survey done by McKinsey, basically reinforcing the consumption upgrade patterns has started, and we expect this to continue. Post-virus, we have also seen consumers become more health conscious, further driving the demand for high-quality consumer brands. Aside from the quality of the goods itself, the intangible aspect is also important to consumers nowadays in China. We are seeing increasing demand for services such as gym, traveling, and even services related to pets. The next theme would be healthcare. Healthcare spending in China has plenty room for growth. Currently, healthcare spending as a percentage of GDP is only 5% compared to 18% in the US. Aging population and growing disease incidence rate will bring this number in China to increase. We mainly invest in innovative drug maker and biotech companies because of their drugs are not subject to centralized procurement tender, meaning they are not commodity drugs that are subject to steep yearly price cut in China. In this table, we listed out some companies that have a strong pipeline of new drugs and are either launched or already in advanced stage of clinical trial. We expect these companies will gain market share from the current imported drug market in China with more competitive pricing, and thus can enjoy sustainable earnings growth. As you can see, China's average tuition fee for private universities are significantly lower than many other countries. It is currently still below 2,000 US dollars per student per year. So in order to cope with the increasing requirements, we have seen steady increase in tuition fee in China, about 3 to 5% per annum in the past few years. This rate of tuition increase actually has been more than enough to cover the cost of increase. Every year, there are more than 9.5 million students taking the university entrance exam in China, as you can see from the lower table. However, there are only 4 million bachelor degrees and 3.5 million diploma degrees available per annum. So we do see a insufficient supply of higher education. This slide shows the China market from an enrollment ratio perspective. Out of the total 16 million population that are eligible for the university entrance exam, we estimate enrollment ratio is only at 48% versus over 80% enrollment rate for more developed countries. For example, the ratio in US and Canada exceeds 80%. it is the government's intention to increase China's enrollment ratio. As in many countries globally, online consumption demand is growing rapidly. In China, not only we are seeing strong demand for physical goods via e-commerce platform, we are also seeing huge potential for online service platforms. In e-commerce, monetization rate is an important measurement of revenue generated from the platform. Monetization rate is the fee ratio charged by the platform provider to these vendors, similar to the concept of commission fee and advertising fee. Judging from the experience we have seen from the physical goods from the e-commerce platform, we estimate the monetization rate for online service platform can grow by 6 times in the years to come. In this slide, we list out the percentage of sales via online platform as a percentage of the total market size in China. As you can see, about half of the electronics are already sold online. Apparel, maybe about 43%, versus only 11% of beauty services are booked online. Food catering is even lower at only 3%. We estimate online booking service market will grow over 30% annually in the coming years. Despite China was encountering very steep fight against the COVID-19, the Chinese government has reiterated many times that they are focusing on the development of 5G. We expect 5G is going to open up a lot of growth avenues in many aspects that 4G couldn't due to its bandwidth applications. We see industrial use will increase, such as in smart cities, cloud computing, AR, VR, and even autonomous driving. The number of connected devices are expected to increase more than double by 2025, from 9.1 million units to more than 25 million units, driving the big demand growth for Internet of Things devices. With that said, except smartphone, other 5G related sectors are expecting double-digit CAGR growth till 2023 and beyond. The near-term pause on global demand due to the lockdown may have some short-term impact. However, outlook in medium to long term remains solid as global economy activities resumed. Anyhow, the near-term demand is not all pessimistic. Due to more activities, work from home, demand for notebook, cloud services have been increasing, much better than previous expectations. And here concludes my part of the presentation.